Hey guys, Mike here. So old Papa Powell spoke today and the market said, we heard it all yesterday, right? And there's a couple things he actually changed in his statement, which we'll go through. One, which is pretty big. I almost feel like somebody talked to him yesterday and said, scale it back a little bit, which, we'll go into that in just a second. Then we're going to go into some important things that happen on the charts, and also something you need to understand. I'm going to show you the visual, because I always get the question of how in the world can this market either be holding up or even rallying, for that matter, when you're seeing the economic news that's coming out and stuff like that, and the yield curves and everything else that's happening. So I'll kind of show you something that may make a little more sense on that. And I will say, if you're a Silvergate holder, that stock crashed again. I think like the second time in what, 2 weeks, 43%, down to $2.93. Like, and just think, to show you what a bubble is, March 2022, a year ago, $162 stock. November 2021, $240. $242 in a year and 5 months is now $2.93. Man, that's yes, that just kind of shows the market we've been in, right? But anyway, looking at something very important, our guy Nicky Leaks put something out this morning, and he says, hey, Powell makes one notable change to his opening statement, and Powell says, if, and I stress that no decision has been made on this, if the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes. And you would think, well, maybe the market said, oh, maybe they're not going to do it, right? I mean, why else would he really say that, right? But now a 50 basis point hike, I believe it's 75% chance the market's actually putting on there. And so again, because he goes on to say in another statement, he wouldn't have put that out there if he didn't think that was going to be the case. Not 100% guaranteed, but remember, I told you the Fed bends over backwards, not to surprise the market, okay? And so you got to keep that in mind. Now, looking at the cues here real quick, one thing important that could be taking place very soon over the next 1 to 2 trading sessions is you can finally get your first golden cross since 2020. And remember, this is not a bearish thing. It is a bullish thing. It does not mean the market is going to go straight up. You can also see it's about to fall back in that chop box if it keeps dropping, which it's been in since September. But, understand the golden cross is something that happens, especially, I would say, keep in mind when it comes, especially a prolonged crash. There it is since 2020 right there. That was a 19.5% drop. Got the golden cross come out 2018. I'm going to come back to this area right here, because what do you see? You see a golden cross and go down, but that's more of a flash crash, right? That's a 1 month drop. You can see the big candle there, and then it flips. I'm going to come back to that in just a second. But going to 08, as you can see, ends up coming up, long drawn out bear market, bam, flips golden cross. And of course, same thing you see in the dot-com bubble. And I think it actually his inception was 1997. So I understand people saying, look at that right there. That's a bearish cross right there. But yeah, that's after the market already went up 59%. So we were not in a bear market anymore. That's kind of the key when I look at golden crosses, because I mean they cross all the time, but it's coming out of at least 20% more drop, and I think an extended drop. But I think this is what a lot of people are expecting, right? This is a big drop here, but again, it happened in 35 days, so this isn't some drawn out one. But I think when you look at the overall look of this one, this is what people expected, right? They 2022, we went down, we're coming up, and then people are saying, okay, we're going to hit a recession, and then we're going to crash back down, obviously. And so I think, and have the death cross, and I think that's what people are expecting. Now, that brings me to this. Understand something. Markets will bottom one way or the other, whether you like it or not, at the worst times, when things are just falling to pieces, okay? When the bearish sentiment and the fear and greed, so like people are start jumping out of windows, is so bad. That's when the markets will bottom. What do I mean by this? Let's go back to the financial crisis in 08, right? Look at when the market actually bottomed. If you don't know this, it actually double bottomed. It bottomed November 2008, and it rebottomed, set the same kind of bottom, came back down in March of 09. That was the official one, then started ripping, right? Look at the unemployment rate. You can see it's climbing, right? We're in the middle of a recession, okay? Right there, it bottoms the first time, comes back down, but look what's going on in the unemployment rate. For the next 6 months, it goes from 6% in all this time all the way up to 10, for crying out loud. When it did the final bottom, started moving up rapidly, we went from 8 to 10% unemployment. And so you can see that's at the worst time. What else was happening? This financial crisis. People getting evicted and foreclosed on at crazy record rates. See what happened right here? Here it is, delinquency rates on single-family residential mortgages. I remember whole neighborhoods empty in my city when I lived in Atlanta at the time. You can see there's the bottom right here, right? There's the second bottom. Don't matter. 3 more quarters of terrible economic data. Didn't matter. The market was ripping higher. It was up double digits at this point in time. All right. The inversions you keep hearing about. Here's your 10 and 2. What's happening now? Heading down. Still heading down. Okay. Understand. Make sure you understand this. When does a recession normally happen? When it turns back up. We ain't even got to that point yet. You see how far down it is? It starts turning up, and then we end up hitting a recession, right? You see it in 08. See it in the dot-com bubble. See it back in the late 80s, early 90s. And what's happening now? For the first time in history, this is the worst. This is a probability model that people have been using. The big boys use it. And what do you see? This takes in the 10-year, 2-year inversion. And you can see it's the highest probability of a recession we've ever had on this model, which goes back to 1991. And what's even crazy about that is, I said this might be a year first, believe it or not, the number of recessions that have started in the 3rd year of a president, 0. 0, 0, 0. We've never had one in the 3rd year of a presidency. Isn't that crazy? Right? And it's also one of the best performing years of it. So this could be a year first. And I'll tell you what, watch out for year 1 and year 5. It seems like year 1 of a presidency is a good time to short the market, isn't it? I mean, look at that, 9. And year 2, only 1. You're going from 1929 to 2021, right? That is mind-boggling. And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. And so I want you to keep that stuff in mind, but also I know I can hear you screaming at your phones, iPads, whatever you're watching this on. I get it. Things are just totally backwards right now. Normally, we're coming down a recession, which means what? That means the interest rates and stuff are just at 0. They've been put down to 0, knocked down to nothing. Then we get free money from the government. That's what has caused all those bottomings right there, okay? That's what we're kind of waiting on now. That's why people are shocked to go, could this possibly be a bottom? And it's like, I'm not, again, I would never call that. But when you're especially, again, looking at all the numbers and the data, which is confusing as heck, whatever. But, you know, looking at it, you see the probability of the recession are huge, right? But again, I still say, and it wouldn't, I mean, this, what I'm expecting is to come back up and then crash back down when the recession finally does hit. If we avoid a recession, with the rates keep going, especially they hold them for a long period of time, I don't see how anybody can justify saying our economy and the market is set up to succeed in that environment. I know it hasn't done it in 15 years. Maybe it'll surprise us. It could happen, all right? But I just think there's just so much liquidity been pumped in over all these years that, you know, it's kind of like a bodybuilder. What happens to one of those super steroid freaked out bodybuilders when you take their steroids away? Have you seen the pictures? Right? And that's kind of what I feel like with this. Also with some data I'll bring you tomorrow, which will, you kind of go, wait a minute, there's another game in town, right? Tina got divorced from Tina. Tina's out. Now people are putting their money other places. They have alternatives, right? So how do you get back to those all-time highs if the government's not the one pumping money in and we're not pumping 100% of our money in, we're putting 20% over here or something? You know, just want to, food for thought. Let me know what you think about that and stuff. I get it. But going into some other stocks, Tesla. Tesla's one to watch here. I've seen people put out stuff saying that it is bullish and, you know, whatever, maybe that's the case. But I'm just saying it's in a very precarious situation here, right? Because what you have happening here, obviously, fell below the PLC here. That volume shelf right there, you got a big volume gap below it. You had the 8 and 21 about to cross over on the daily. The RSI just went below the 50. The MACD didn't look no better. When you flip over to the weekly, that's not looking more bullish to me. Because again, look at the RSI. When it flips over, goes below that 50, normally you get a sell-off, right? It looks like the MACD wants to cross over to me and start to roll over. And then, of course, look at this right there, big old volume gap. And then when we go back to the daily, what do you see below it? Big old gap right there, right? Starts around 157-ish, I believe, ends around 147, somewhere in that range. And so when you look at that, you know, gaps can be magnets, right? Especially when it's right there in that volume gap. And, you know, I'll share this with you. I put this in there last night, but, you know, understand the kind of formation here. We got a rounding top formation. Some people are calling it a distribution formation as well. And so normally these end ups in sell-offs. That's usually what happens, okay? So something to keep in mind, just letting you know that. Not saying it's going to happen, but that's, what you can see. And what's even more interesting, we go back here and then we click on this. OPEX will be next week, right? So you got your monthly options expiration. Well, we're going to go from max pain at 195 this week to drop to 185 next week, right? More calls than puts out there. And so, again, it's going to depend on what the market makers want to do. I mean, Tesla's its own ecosystem, that kind of stuff. I'm going to do what they want to do. So I'm just putting it out there. I'm not saying it's going to happen. Again, the one thing you hadn't seen, though, is where's the dip buyers at? That's the big question. I don't see a whole lot of dip buyers, and Tesla hasn't been following the market. It's been red multiple days. Even when the market's green last week, it was still red. So that's something to keep in mind as well. And then this came out today, and I guess an investigation is going to be launched into Tesla's autopilot, and something about steering wheels coming off the cars, and I guess it was a fatal crash. So we'll see where this leads to as well. I mean, I can't imagine this is going to affect the stock, but I was just trying to picture myself driving a Tesla and the steering wheel coming off. That didn't really make a whole lot of sense to me. But again, also has to do with the auto driving system as well. So let me know what you think down in the bottoms. Tesla going back up. Again, that area it's in, it's precarious. Can't get above 200, selling off, not reacting how the market reacts. Dip buyers are kind of seem to be shrinking. And then you're coming into an area where, and also understand another thing is people were way up in this stock. And what happens, right? People get way up. It ramps so fast off one of those gamma squeezes that people are like, well, dang, I didn't think it was going to run that fast, so better secure some profits while I can, right? With all the bearish attitude going on in the market right now. So let me know what you think down in the comments anyway, guys. Always enjoy hearing what you got to say. And then, of course, Nvidia, hey, just keeping you up there on this one. I think it's going to be a classic, but continues in this ascending wedge up, right? Just staying in there, big green day to day. Doesn't matter what the dollar does. Doesn't matter what yields do. Doesn't matter. Only got 6.21% to go before it, actually 5 before it hits the gap, 6.21 to fill it. And then we'll see if that bearish divergence finally kicks in and it starts to sell off and fill the other gap. But remember, it kind of works out perfect because what's Nvidia? What have I told you? On the weekly, got a history of going for weeks being overbought, right? And so that is the key to why I think this thing can just keep on going up. And it's obviously totally detached from reality. And I say that because no matter what goes on, it just keeps going up, pumping. But also with the semiconductors, what's funny is they've totally detached themselves from how the dollar and yields do, right? In 2022, anytime the dollar got strong, and especially a combination of yields going up and the dollar, it sold off. But no more of that. It ain't happening because stocks was up big today, right? And then last stock, Meta. If you wonder, if people don't ask me and send me emails like, how come this stock keeps going up? Well, it's because they keep doing layoffs. They can deny this all they want, right? Somebody told me last week they denied when I put this out. But, this is going to happen. And it's because they figured out the game, right? They keep mentioning the word efficient over and over and over, which means cutting payroll and buying back stock, right? That's what it is. We're going to buy back stock to stabilize it moving up, and we're going to be cutting costs, right? Put towards the bottom line. I even read where they want to get this stuff done. Then we get all these people identified before Mark Zuckerberg goes out on maternity leave with his wife because they just had a third kid. So trying to rush it up. Let's go. And guess what? I'm sure the people are going to be just fine because the JOLTS job report came out, and guess what? A whole lot of job openings. I think it's over 10 million, isn't it? If I'm mistaken, 10.8 or something like that. So way more people, way more jobs out there than people are looking for. So I'm sure those people get laid off will go out and they'll find a job in 30 days, making good money. So we'll see. At least I wish it for them. I hope that's the case. But again, why did Meta sell in the first place? People taking profits because you had a huge jump after earnings, right? And so they wanted to lock it in, hope to close that gap. That gap is still sitting there unfilled. And so that will play out in the future sometimes. Like I said, same thing with Tesla. Moved up so fast on a gamma squeeze that people start locking in profits now. They're like, let me get out of here because they see it hitting that resistance. That means it's not going to go back up, right? Depends on what the option markets wants to do, what the market makers want to do, and what big money wants to do. All right. I mean, everything on the chart says it should come down. But hey, we'll have to see because we've seen that before, right? It's ain't our first time watching this movie. So we'll have to see on that. But, let me know in the comments what you're doing, what you think. And hit the like, subscribe button if you got anything out of it. And I'll see you tomorrow.